Something unusual and potentially dangerous is happening in the financial markets right now. This isn't just an investor problem. If you have a 401k, a retirement plan, or money in index funds, you're already exposed whether you realize it or not. Nearly 40% of every dollar in the S&P 500 is now concentrated in just 10 companies, led by Nvidia, Microsoft, Apple, Google, and Amazon. And one company stands above them all. Nvidia alone now absorbs roughly 8 cents of every dollar invested into the U.S. stock market. Together, these AI giants are expected to spend more than $330 billion this year on data centers, cloud infrastructure, and GPU farms. That sounds impressive, but here's the red flag. To justify today's stock prices, the AI sector would need to generate over $2 trillion per year in profits. That's more than Apple, Microsoft, Google, Amazon, Meta, and Nvidia combined have ever produced. Even more concerning, OpenAI CEO Sam Altman publicly floated a $1.4 trillion spending plan for AI infrastructure. When asked how that level of spending is possible with roughly $20 billion in annual revenue, he brushed it off, later half joking that the US government might need to act as the insurer of last resort. Markets noticed, because that doesn't sound like innovation. It sounds like a potential bailout scenario. Here's where the system starts to loop. Nvidia invests billions into AI companies. Those AI companies pay Microsoft and Oracle for cloud services. Those cloud providers buy massive amounts of Nvidia GPUs. Nvidia profits and reinvests again. On paper, everyone looks like they're growing. But in reality, the money is circling the same system, often financed by debt, future promises, and accounting assumptions that don't always show up clearly on balance sheets. You might think, so what if tech investors lose money? Here's the problem. AI stocks now dominate the S&P 500 as their valuations rise. Index funds are forced to buy more, automatically allocating new money into the same companies, regardless of profitability. That creates a self-reinforcing feedback loop. Eager prices, more index buying, even higher prices. All while real profits struggle to catch up. Some of the most experienced investors in history are paying attention. Warren Buffett is sitting on the largest cash pile of his career. Michael Burry, famous for predicting the 2008 crash, has placed major bets against Nvidia and different strategies. Same message. The market is priced for a future that may never arrive. Even Deutsche Bank has warned that without AI-driven spending, the US economy might already be in a recession. So the real question isn't just how big AI will become. It's how long the hype can survive before reality catches up.